Financial markets in Europe are trading higher this morning, with the UK's FTSE 100 index currently up around about 74 points, the DAX in Germany up around about 80 points, and the Euro Stoxx 50 index higher by around about 30 points. US stock futures are doing very well as well. We have the Dow Jones Industrial average front month futures contract currently up around about 114 points, indicating a firmer open on Wall Street, rebounding from yesterday's losses, and the corresponding S&P 500 index is currently up 12 points. Across the other asset classes in the FX space, we have a firmer US dollar, a stable euro. The Russian Rouble is now starting to pare some of its losses after yesterday's steep declines, and then going into the core government bond space, we are seeing UK gilts and German bonds take lower. Yesterday we saw demand for both UK gilts and German bonds and other core government bonds on the basis that investors are feeling extremely risk-averse, dumping risky assets in favour for those traditional safe havens, and that also benefited gold prices yesterday. However, today gold is down about $11. Good morning, I'm Ishaq Siddiqui and welcome to your daily market bite. I'm going to give you guys a quick idea of what's going on in financial markets around the world today. So like I said, we had a very weak session in Europe yesterday, and those declines were led by tensions in the Ukraine and worries that we may see a new Cold War with international forces, particularly the Western powers, involved in Ukraine, as Russia had a number of troops deployed around parts of the Ukraine, particularly in Crimea. However, today that's changed. Vladimir Putin, the president of Russia, has called back his troops, got them to return to base, and said that it's a routine exercise, so essentially downplaying any sort of fears that a military intervention by Russia was being thought of. And in the US markets overnight, we did fall in the back of those concerns in Russia. However, Asian markets bucked the trend. We had pretty decent data out of Japan. Pay wages in Japan grew under Abenomics, which has been very positive for the Japanese economy on the whole, and at the same time the Australian trade deficit narrowed while exports rose. So a pretty good set of data out from the Asian market, which helped share markets in the region track higher. In Europe this morning we are rebounding, and that is on the basis of risk appetite being back on board, as the military threat now is somewhat fading, as Mr. Putin has got his troops to return to their base. That said, there are still a number of concerns about the Ukraine situation, the rising tensions in that area, particularly the fact that we now have Russia itself being very active in and vocal in the opposition to how the West is perceiving the events that are taking place, and at the same time the West itself doing its best not to get involved at a military level, but at the same time they're condemning much of the action taken by Russia and endorsing Ukraine's sovereignty. Also, at the same time, we have to remember that the IMF is in Kiev at the moment, and they are trying to hammer out a deal to economically fund Ukraine. Ukraine is currently in a dire economic situation, but the IMF's deal, whatever deal it will be, will come with a number of conditions, which is likely to devalue the hryvnia, which is the Ukrainian currency. But that being said, at the moment, risk appetite is on board, and investors are feeling a little bit more chirpier. It could be said that it's more of a rebound than anything else. Sentiment still remains fragile. We've had UK construction PMIs out today, which have been decent on the whole, and now we've got Eurozone PPI data. Not much out on the US plate, so a lot of the focus will remain on the situation in Ukraine and any sort of developments when it comes to what Vladimir Putin has to say and other Western powers. Thanks for watching your daily market bite. Tune in for another one tomorrow.